Good morning, everybody. Welcome to the Lock in Your Success Options Trading for weekly for income weekly update. Before we get going, we just got to quickly go over our disclaimer information, and we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please note that we are using hypothetical computer-simulated trades in the presentation, and actual results can vary, although we do the best we possibly can to make sure that we're as accurately represented as possible. And also the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. Okay, I'm getting a comment that there is an echo. Is that the case with everybody? Okay, David, it sounds like there's no echo with anybody else. My best guess would be maybe something on your end, possibly maybe use a headset. Sometimes your own microphone feeds back. Okay, great. So let's move on. All right, so if you watch this on YouTube or some other venue, please come on over, check out our programs at lockingyoursuccess.com. We have the M3, Bearish Butterfly, the ROCK, the M21, our group coaching packages, as well as one-on-one trading triangle coaching program and one-on-one coaching sessions in general. Join our mailing list, get the free reports, 7 secrets to becoming a successful trader. Stay tuned for our programs currently in development. Okay, so let's take a look at what went on with the markets last week and what we might think is coming along in the future here. So just get to our charts. If you remember, we were talking about, or pretty sure that we're going to get a pullback in the Russell, probably to the 1160 to the 1165 level, and that's what we were saying last week. And then from there, we were expecting the market to bounce. Well, that's pretty much what we got. We had a fairly aggressive 50-point down move, and we pulled down a little bit steeper than the 1160 level, but that's not a complete surprise. It came down to a 50-day moving average. And we always say that the Russell tends to overshoot its boundaries a little bit. So that being the case, we did come down a little bit lower than that, but that's pretty much as expected. If we look at the SPX, this is just a very normal pullback to a 20-day moving average. It wasn't even a big move. Our uptrend's still intact. We weren't even able to really test a primary support level here, so very minimal pullback in the SPX. If you remember right, we're saying, the Dow had a breakout on that half day on Thursday, and I was telling you that those low volume breakouts very often fail, so I didn't put much into that, and that's what we had. We had a failure of the breakout, and whenever we get that, we usually get a pull down to a support level, which it didn't even really get to a support level, but it did pull back as expected. And then the NASDAQ, same type of thing. We just had a pullback to a 20-day moving average. And we got a fairly significant bounce off of that. So that's an indication of a strong market as well. So, I've been asked a couple times, if people are getting a little nervous. I was like, well, because the Russell came down fairly aggressively last week. But, you have to look at the rest of the markets. In reality, this is just a very, very normal retracement. We just had a 130-point up move in the Russell, and we pulled back 50 or 60. That's completely normal. And from here, from a macro level or a big picture level, we are all systems go for the bulls. There's really nothing here to indicate any weakness in the market whatsoever. The Russell just continues to be in its sideways trend. As we said, as we were expecting more or less for the last 3 months or so, and the rest of the market is trending upward. So everything's good. Shorter term, the market's a little bit harder to call direction now that we've had this pullback. We said last week that after we got the pullback, I was expecting a bounce, but I didn't know where that bounce was going to go. We were at least going to go to the 1170 level, which we're probably going to get there this morning because we're looking at a 10 or 12-point gap in the Russell this morning. So that was to be completely expected. Depending on where this bounce goes, it's going to be easier to call the rest of the direction of the market. If the Dow and the SPX and the NDX actually had a decent reset or a decent pullback, I would be expecting the market to, the Russell just continue to break higher and actually break out in the next 3 or 4 weeks. I can't say that's going to happen now, and the reason is because we didn't, the SPX is still overextended and the NASDAQ is still extended. The Dow's not, but the other two indices are. So that's going to tend to mute our up moves a little bit. I mean, we may see some daily aggressive moves, but as far as pulling in a 100-point up move, that's not likely till we get some sort of a reset in the SPX and the Dow, or we get some really, really good news. But so I'm expecting still to stay in the sideways range from, our 1150 level to maybe our 1215 in the coming week. Well, at least in the coming week, but certainly maybe even in the next month. We'll have to see if we can get some sort of a decent reset in the NASDAQ or something. In the SPX, it may give us the power to propel higher, but I just don't see it right now. So that's what I'm thinking for the markets. And let me just check quick questions. No, everything's good there. So let's take a look at our positions. If you remember, we were looking at this ROCK position on the July ROCK position on last Monday morning before the market came down. And I was saying that, essentially I'm good for the month with this thing. If the market was going to continue to grind up, I would continue to follow it in the ROCK position. But if the market was to come back, I'd be happy to exit this at around a 10% profit. So, early Monday morning, we got this pullback into almost a little under the 1200 area. Right here, the trade was up over 10%. I was clearly expecting a move down to at least 1165. I knew that was going to be a fight. So I said, you know what, we're just going to exit this when the market retraces near the peak of our T+0 line. I couldn't quite hit the peak, but close enough that I was completely happy with that, and ended it up with, if we just go to the end of the day or the following day, being able to pull this out at a profit of 52.20 for the month. So that was a good trade. Like we started as an M3, and like I said, when I did the M3 to ROCK conversion, I didn't like to do that, but I wanted to demonstrate it in the trade guidelines. I didn't like to do it because I thought the market was going to drop significantly, but we did it to demonstrate within the trade guidelines. The market dropped, we got out, and this is where we ended up. So, that's the way to play one of those. So that is in the books for this month here. As far as the M3 trade goes for July, if you recall, we were positioned pretty well behind the market last Monday. So the pullback didn't require us to do any kind of adjustments. This handled that quite nicely, and if we just, so there were no adjustments to this trade. If we roll this to today, or not to today, but for Friday afternoon, this position here is sitting up about $3,000. I actually was seriously considering this Friday because I'm expecting a bounce off this level, and I didn't know how aggressive the bounce would be. But if we stay in the 10 to 15 point level this morning, and we don't get too much of a follow through, this will actually look really nice. The volatility will come out of this. And I'd be happy to exit this in the $4,000 range, which could happen if the market doesn't take off. If the market takes off, we just take off our upside risk and we either expire it or exit out of it. But this should be not a big winner for the month, but it should be definitely a positive trade. And let's see, the more interesting trade, however, is this bearish butterfly, and we can talk about that. If you remember, on the bearish butterfly, I was saying that, well, we were clearly expecting the market to come down, again, down to the 1164 level. And if we were playing this and we were paying any attention whatsoever to the technicals, that we never would have rolled up on top of the market like this. This was by guidelines, that's what we're supposed to do. So that's what we did. In reality, coming into a situation like that with what the charts are doing, I'm hanging behind the market, and I would have more likely been in maybe an 1160, 1180, 1200 position rather than rolled all the way up here. But as we do in the updates here, we go completely by the guidelines that are within the programs. So we went ahead and rolled up on top of this. And we knew this, I was pretty sure this was going to make for an interesting trade for the week. And what I'll do is I'll just kind of show you the end of day adjustments, although being 11 days to expiration, we do some intraday adjustments here. So if I come to Monday afternoon, we had this 20-point down move, and let's see, I ended up buying 5 1180 butterflies and selling 4 of the 1220 butterflies. If we come into the T-log here, 177, we bought 5 of these 1180s. We sold some of these 1220s. Brought ourselves into our end of day delta guidelines of around 250 plus or minus. It was 260. That's close enough. Here's what the position looked like at the end of Monday. Of course, on Tuesday we got a continued down move. So what we did there is we bought 5 more 1180 butterflies. We sold the remaining 1220 butterflies and ended up and I also sold off some of these 1200 butterflies. We ended up in a position here down about $8,000 and sitting right here. So by this point we had 10 1160 butterflies, we had 10 1180 butterflies, we had 8 1200 butterflies. We're still within our profit and loss limits. Our delta at this point around positive 200, which is this is a little bit lower than a lot of times I'll have it, but at the time, the exact time I did the adjustment, it put me to about 250, and that was acceptable for going into the overnight. Then on Wednesday, we can look at our T-log stuff for Tuesday. Wednesday, we didn't get much market movement, so no adjustments were required. You can see how quickly our profit and loss comes back. It comes back cut in half just because we had a relatively flat day. We ended the day at around 148 positive delta, and then Thursday is the day we got that big gap down. And one of the things you need to remember is we are in expiration week. When we get a big gap down like that, I think it was like 27 points. Couple of things I want to take note. First, the money's already gone. Second is that you have a lot of mispricing in the market due to volatility. So, anybody who has done one-on-one training with me, I mean, unless you're decent at day trading and calling opening gaps, we generally hold the positions until 10:30 in the morning, regardless of what it looks like on the open. Because a lot of times you're gonna get the open, you're gonna buy the open, the market's gonna take off the other way. So that's pretty much what we did here. Come into Thursday at 9:30 for an example. The market is, we're well over our maximum loss area. Again, opening gap, the money's already gone. There's nothing you can do here, and we're having mispricing. So to me, it makes sense to hold the position a little bit, let the market resolve itself. Now, I will have an absolute point at which I will exit the trade because the market can keep going down. But what I'm going to want to see is a continued down move in the markets and a continued pricing against me. That never happened. This is actually that's a 9:30 number, so that's not a good number anyway. But if you go to 10 o'clock, at the bottom of the market, it's posting down 18.6. Again, at 10 o'clock, I'm holding my position till 10:30. That's what we typically do. That's what we've done for years here. And you're coming into 10:30. The market's had its relief bounce. It's the positions within its loss levels. I'm still going to typically hold the position here because I don't know how much of a bounce we're going to get. So I want to see play this out. If the market had gone back down again and retested its lows, that would have been a reason to exit the trade, probably at around our max loss number. That never happened. The market bounced, it took off. So we essentially held position here till about 2:30. And then if we go to, we'll just go to 2 o'clock here. So we held position to around 2 o'clock, and between 2 and 2:30 we made our adjustments. So here I'm pushing my positive intraday delta, but now after this bounce, I am concerned with the market coming back down. So I wanted this to flatten out. So coming in here, let's see, the actual adjustment on Thursday was to buy 10 1160 butterflies and sell 6 of my 1200 butterflies. So now I'm down here at 1160, 1180, and 1200, sitting in a position that looks like this, which isn't a terrible position, by the way. This is I'm perfectly happy with. And from there, if we go to the end of the day, Thursday, market came back down a little bit. Did I do any more adjustments Thursday? I don't believe so. Yeah, well, this is where I ended up. I ended up in 1180s, 1160s, and I just had a couple of 1200s still on by the end of the day. Coming into the close at positive 250 delta as by guidelines. And then if we push into Friday, then I got rid of all my 1200s. I bought 2 1140 butterflies just so that we can get our delta under control for the weekend. And this is what we looked at like as of close Friday. And of course now we're looking at a fairly large bounce, so we'll probably be fighting this to the upside at some point today and make some adjustments. It's going to be a rocky trade into the right into expiration. And like I said, all this could have been avoided with a little bit of M21 techniques, charting techniques, seeing the market coming into the levels it was coming into. We were fairly sure we were going to get this move down. This could have been a spectacular trade with just a little bit of taking a little bit of charting into consideration. You know, instead it was a real pain in the neck type of trade. But you know, either way, the trade is very powerful and it works out most of the time, even in stuff like this. As far as whether it's going to work out this month or not, you know, we don't know. It depends on how high this bounce goes. But it looks like we'll probably be able to pull something positive out of it. We'll just have to wait and see. And that's all I have for the July trades. If we want to come over to the August trades, you know, the good thing about being far from expiration is these moves really don't bother you a whole lot. So if we look at the August Bearish Butterfly, there were actually no adjustments in this whatsoever. Let's see, I think we're in calls, right? Yeah, because I made the mistake of entering calls. Not that that's a problem, it's just not what I usually do. Either way, we're looking at a $5,500 profit and loss as of Friday. This came really close to an adjustment point. I mean, if you were doing intraday trading with a Bearish Butterfly, then you know, we would have probably had our adjustment point. So not from a delta theta ratio, but if I get too far outside this tent, I will drop our 1200 butterflies. I mean, that never happened. I mean, we only look at this end of day. It would be very, very rare circumstance where we do anything intraday on a Bearish Butterfly that's far from expiration. And you know, now we got our bounce. We'll be bouncing into the 1170 level, which is going to make this trade look really, really nice. So that's looking good. No adjustments there. The V Condor, again, we don't typically touch this intraday. And that being the case, at the end of each day, our delta numbers were okay. We're getting really, really close to making an adjustment here, but nothing. Nothing actually triggered an adjustment. So this is what this position looks like coming into the weekend. If we do get our anticipated bounce and it holds today, it puts us back in the center, so this will be in no trouble at all. And I also opened a M3 for August. So if we look at our August M3, I entered an 1130. At 1130 put butterflies with 1130, 1140 verticals. We did it as one order as a broken wing condor, and added an 1110 call, put ourselves at slightly negative delta, and a position that looks like this. The gap this morning shouldn't really bother this at all. And this is what it looks like, nice flat T plus zero line, and we're ready to go for August on the M3. So that is all the positions that we have on. and as well as our new position. And as for market, I'm expecting a bounce. I'm still, like I said, I'm not quite sure of the extent of that bounce at this point. I wouldn't be surprised to see us come back up to 12.15, but I would expect that would take a little longer than this week. All right, is there any questions with anything? Do I think the NDX is leading the market up? Well, it was certainly the strongest bounce last week, and with all the indices here, if we do an NDX, you expect this bounce to at least come to the previous highs, which we may get there today, right? Because I'm sure we're looking at a significant opening gap. So we very well may come up into here. If this breaks up, then yeah, I mean the NDX well, the index and the SPX are leading the market in general. I think the index is a little stronger, so I think you're right. The M3 was actually entered. Sorry, I didn't show the T-log. Like 2:15-ish on the 11th, which is Friday. That was the entry for the M3. Let's see. If I was going to do today, would I do an 1140? Well, that all depends on where today ends up. We all know we get these opening gaps, and we could end up down. And we can get this opening gap. Let's see, what are we at on the Russell? If we are saying, let's assume the market closes where it opens at around 1170, then yeah, I'd be more interested in 1140 than 1130. With the large move, up move, would today be a good time to get into a bearish butterfly for September? I wouldn't be trying to get into a bearish butterfly for September. Well, actually, what's the date to expiration? I mean, right, we're still 70 days to expiration here. If I had so as far as altering the guidelines to enter a bearish butterfly, I will enter a bearish butterfly early if I have a compelling reason to do so. An up move today, to me, is not a compelling reason to do so. If we get up back into the 1215 area, then that might be enough of a reason. Well, again, you have to put everything in its context, right? Everything in its context is basically saying, by that I mean, if the Russell were to shoot up to 1215 and the SPX were to get up, because this is going to set in another cut pattern when the market takes off. You're going to have a cut pattern here. The next overextension on the SPX is 1123. The next overextension on the NASDAQ is going to be approximately 4,010. So if I get to Russell to 1215 and the NASDAQ's at around 4,010 and the SPX is at around 2023, and then if you get the additional signal that the Dow is up in maybe the 17.3 area. If that scenario were to come into play, then that would be an excellent bearish butterfly call at the 1215 level, or anything over 1200 really. That would be an excellent call for a bearish butterfly. That would push me to get into an early bearish butterfly. Until then, I don't think it's a terrible entry necessarily, but it wouldn't compel me to get into it early at this point. For August M9, which is, if anybody knows, is a bearish butterfly. If you've been with me a long time, it's called an M9. If you had taken off your 1200 due to a delta theta problem, what would be your adjustment now to the upside? Or would I write it out as a single 1180? By guidelines, right? Are we talking about by guidelines? Are we talking about doing some sort of a trade modifications? If I'm going by guidelines, then if I pull off my 1180, I don't get back into, we start the trade over again. So we're at 1180, we go to 1220, we start scaling back in again. If I'm going with the assumption that if I'm going to do like an M21 style technique, and I'm concerned now that we've had our reset, that the market's going to maybe break out and go higher, right? Because the next, if you're taking the same cup pattern analysis, if the SPX and Dow were not overextended and they do reset, and the Russell kind of goes up while the other indices goes down, which happens occasionally but not very often. If that were the case, then and the Russell breaks out, then we have a target here of about 1270. So that being the case, I wouldn't want to ride that out as a bearish butterfly. So the safer thing to do at this point is to, if you're at an 1180, as you start to exceed 1180, just start hedging it off as an M3. Which you'd probably start doing that at the 1200 range. You just hedge it off a little bit. Let this area here resolve itself. If the market really takes off at that point, in other words, if we come up here and the market takes off, you can eventually convert back into a bearish butterfly. But in this level here, I'd probably be interested more in being in an M3 type of a trade. For the July bearish butterfly, how long will I work the trade? I'd be willing to work this trade until it's positive. So that's going to be, that maybe even be till expiration day. I may not want to do the expiration overnight gap, but I'd be willing to fight it right basically till expiration day. I don't have an issue with that, and I'm comfortable doing that. I wouldn't recommend that for everybody. As a matter of fact, if you're somebody who's a newer bearish butterfly trader and you actually survived the gap down on Thursday, because a lot of people are going to panic out of that. But like I said, I do have, in general, when you talk to our students, unless they're day traders, I try to keep them out of the market till 10:30. Let the market settle down, and then make your adjustments out, because you're not going to get pricing or anything. But if you're newer and you did happen to survive Thursday, then I would consider getting out. We have a huge gap up today. Again, I'd probably wait till 10:30, see if the market settles out at all. But it looks like the market's good to go, which is not really surprising. We're kind of expecting that, right? All right, am I going to place the September M3 this week or wait until next week, since we will be more than 56 days to expiration? Yeah, so for, there's no compelling reason, again, there's no compelling reason to get into a September M3 early. So I would tend to wait to 56 days. For the sample trades, I'm not overlapping trades, so I haven't been doing them from 56 days. We can start to do 56-day samples. That's not really an issue. If you guys want to overlap trades, send me an email and I'll start them from 56 days. We'll just start doing that. It's not a big deal either way, but I've just been doing, most of the clients who are doing that have not wanted to overlap trades. They've wanted to stay in one trade. So I've been avoiding long periods of time of overlap, which is why I waited till this Friday to get into August. I thought it was a good time to get in. So I went ahead and got into the M3 on Friday, which is not 56 days, right? It's a lot shorter time frame than that. The trade works in all different kinds of time frames, and I have no opposition whatsoever to doing a sample trade 56 days, every month for 4 or 5 months just to demonstrate it. But like I said, I've been demonstrating for the last 6 months or a year. Not doing overlapping trades. All right. So I'd probably wait 56 days. I don't think that's an issue there. And I believe that is that's all we have for questions. So thank you everybody for all the great questions and for listening to me for a half an hour here on your Monday morning. And I hope everybody has an awesome week trading. And we'll see you next week. Goodbye.